All right, guys, we are back with Bitcoin dying out and the death of cryptos. What I'm doing at this stage of the market. Let's get through the analysis across the traditional markets, the macro cycles, as I need to update you there, and of course, Bitcoin and cryptocurrencies. Hopefully, you have been hitting that like button, enjoying these titles, which aren't filled with warnings and breakings and crazy headlines and different sort of crazy titles and thumbnails. We are beginning to break the YouTube algorithm and get through to a wider audience that can see content that I guess hopefully isn't as hyped up. If you like that, make sure you hit the like. 4,000 likes. Let me know we're still on track with this endeavor to crack the YouTube algorithm and hopefully bring an audience in. A couple of quick headlines. Australia's top exchange may approve spot Bitcoin ETFs. We've seen it in the US, we've seen it in the UK, and it seems like Australia's ASX might bring along some ETFs later this year. At the end of the day, it's all speculation at this point. Could greenlight several spot Bitcoin ETFs? Maybe it happens, maybe it doesn't. Nonetheless, the US and Asia, of course, have got much bigger money to spend in cryptos and gamble than what Australia does. But essentially, just going to the death of cryptocurrencies and the dying out here. We looked at Google Trends yesterday. It continues to die out here. Basically, the market sentiment and the interest over time, as it says here, has basically continued to fall with the search term Bitcoin. Could do the same thing with crypto. Let's throw that in there. You can do a quick search of this in the morning, and essentially, it's been down. So overall, it's not the worst thing in the world. The facts don't lie. It has died out. And you could essentially see the peak interest around the peak times of peak, fundamental announcements and fundamental news pieces for Bitcoin. You can see the peaks there for the halving. Basically, the halving came out last week or the week before. And the interest was back somewhere in March, early March. And then you also had the ETFs when that was released. So you had peak Bitcoin search term interest, which also coincided with the peaks in the price. You had the peak here early in March, basically ran up just a little bit harder for that final week, not that much further, 69K up to 74K. You had the lower top form, and then basically it's come down from there. And we've seen the interest die off. We've seen the average ranges of the bars die off. So we had pretty big bars, a lot of interest going on in February and March, and now basically they've squeezed up quite a lot. You've got a range there of some days $1,500, $1,600 for some of the smaller days here on BTC. So interest is gone. The consolidation seems to be happening, even if we are to see some sort of downside. So I mentioned this yesterday. Whether we remain at 59K low, which is where it sits right now, or it drops to, I took a random number here, 49K, it seems like Bitcoin is still putting in a higher low, a macro higher low for this cycle. We've got higher lows forming the entire time here, the last one being in January, and currently this one here is in mid-April. So whether we see a further downside in May or June, or the low remains on the 19th of April at 59,600, the main point is we're still putting in higher lows. So I want to show you what I'm doing in the market. It's going to be very different to some people. That's okay. But hopefully it will help in some way and you can start to position yourself accordingly. Right now, Bitcoin has dropped about 19% from the top. So nothing different has happened throughout this cycle with each of these corrections. We've seen 60 days to the lows here back in April to June, another roughly 60 days from those peaks down to the lows. And again, that was about 20 to 22%. You probably heard that many, many times before. And so 22% from the top would take us out to roughly 57K. So bringing it down to the 50% level, which is this entire range, that's the ETF low to the, call it the March top, the hype into that peak, and then slicing that through the middle, that'd only be about 24%. So really not too different, which is precisely what we've been looking at here when it comes to those signals from the top that we have been following since March. The 3-day down signal, the red weekly signals. This doesn't suggest that we have to get a major correction of 40% to take it to some crazy lows. But again, I don't know exactly what's going to happen on the black side of the chart. I'm just positioning myself accordingly. If there was a bigger move, great. If there's not, then we know that basically the market's doing what it has done the entire time. You can see for BTC, It's at 47 days down from the old all-time high. So that was something that we went through with each of the moves around the old all-time highs, covering the data there. And typically, once we get past that, it has moved into that phase of roughly 2 months down, and then you've got to climb the way back out. Or you could say somewhere around that 4 to 6 months underneath the old all-time high. That's what it has done in the past. So we just keep that in mind. Doesn't have to happen, but we just keep it in mind because that is what has occurred before, especially after huge moves to the upside, etc., etc. That leads us into the weekly chart, which we covered yesterday, the 3 red weeks, which also brings up possible rally situation and then a further downside. 3 red weeks we've seen many times before. Essentially, it doesn't mean that we go straight down after that, but sometimes you'll see a rally and then a lower low. So more often than not, that has occurred. Does the lower low have to come out to an extreme number? Not necessarily. It could just be slightly lower and take us down to the 50% level, which we looked at being roughly 56K. And again, that percentage down to 56K was only about 24%. So that could be over the course of May. Let's keep that in mind moving forward. Now, over to the traditional markets. Quick recap here for the macro cycle before I get into the cryptos. 18.6 year cycle, still in play. Nothing has changed here. We are well and truly into this winner's curse phase, as Fred Harrison, Phil, and Akil have pointed out. This is the stage where even more money gets flooded into the system. Crazy as it sounds, and yes, it might be contradictory to what we are hearing from other media sources. There are a lot of different views out there, of course, and I know many people watching will watch many other channels, many other media outlets, and they'll be saying all different things. So how do you know what's true? All I would say is go back and review the history. Go back and review the history of the 18.6 year cycle. This is for real estate and the economy, those peaks and troughs in the market. Stock market might run a little longer. We've covered that the entire way through. Maybe the stock market runs into late 26 or early 27. Wait and see. We've got plenty of time to go for that period. One thing that is also suggesting that there is more money coming into the system are financial conditions are still loose. Here is the ANFCI, Adjusted National Financial Conditions Index, and it's still in the looser conditions. Now, I could spend a whole video going over this, but essentially all we're looking at here is that the conditions are still loose, the cycle's still up, we're in a presidential election year. It seems likely that we're probably going to see higher prices in asset prices overall. That takes us over to the S&P 500. This chart is something that I covered last year, looking at the S&P as it breaks into new all-time highs and what that means for the price of Bitcoin. Now, this one happened 2 months later than it has done. It's kind of been on par in the past. There's 2 months there. You can see essentially the S&P going into new all-time high prices and then Bitcoin following suit. It has a bit of a pump up at that time. In this case, however, Bitcoin broke into a new all-time high, whereas in other cases, while the S&P was going up, you can see here in the bars, and this is Bitcoin accumulation through here. You can see the Bitcoin price in orange was also rising up, and then it went on a bit of a grind while the S&P also had a rejection or a few rejections at the all-time high as it was readjusting to the new conditions, and then it started to move again into that bull market phase where the S&P was in a pretty strong bull market, where Bitcoin was also in a pretty significant bull market, and then basically they all came down together like it did in 2022. So you can see the S&P 500 Bitcoin bear, as I've covered here. This period, the S&P 500 hit a new all-time high, correction, another fresh all-time high, but then another more significant correction in late 2018. Yes, it did break to a new all-time high while Bitcoin was coming down. But remember, the money printer doesn't necessarily go straight into Bitcoin. It's going to go in the S&P first. Nonetheless, Bitcoin was going down during this period where the S&P was really essentially grinding. It had its tops, it had its bottoms, tested the higher prices, tested the lower prices, continued to grind, and then we went on that next bull market. So the main point here is that when the S&P breaks into new fresh highs, it's not long before Bitcoin would break into new fresh highs. In this case, Bitcoin got into new all-time highs as opposed to just new fresh highs for a period. Does that mean this time is different? I don't think so. essentially when this corrects, or when the S&P corrects, Bitcoin has also corrected as well. You can see here Bitcoin pause correction at first S&P all-time high, and essentially Bitcoin has corrected here. The S&P has also hit a new all-time high and has also corrected. So what we wait for now is the consolidation and the next signals from the S&P. What is the S&P going to do next? Is it going to continue to consolidate and then try to break out again for a second time, which would then give, I guess, the markets another reason to push out to new all-time highs? Obviously, that's later in the year, but essentially this is still working to a T, so we'll continue to follow up with it. In the short term, the S&P 500 has those 3 red weeks down and is now hitting, surprise, the 50% level, 51.50. So maybe we do see it come back down and test those lows again, as it has done in the past and the past again. And if you wanted to last on another video for another hour, we could go through it again. 3 red weeks down, the rally, and then another test at those lows. So it happens time and time again. NASDAQ, same sort of thing here. It's done 4 red weeks in this case. It's come up, tested the 50% level at the moment. Maybe we do see another move to the downside to test those lows over the course of May. In any case, this is all, from what I can see, just lining up for more consolidation until further higher prices. So that's what I think is happening from the analysis. That's my conclusion from the analysis. You are obviously welcome to make your own conclusion. If you think this is just going to keep going down from that point, the game's over. 2024 is the year of the collapse and the recession. By all means, do what you need to do, sell up and just leave the markets. But essentially, like I'm talking about, I'm looking at the death of Bitcoin and the the death of crypto, and what I'm looking to do in this case. So with that in mind, let's move on to have a look at what I'm potentially doing with altcoins. Now, this may differ to what you're doing. What I'm going to do next as we continue to see Bitcoin grind out in these boring times here, 63 up to 64, down to 62, same sort of thing over and over again. Now, I did put it up on the channel a few weeks ago, just looking at altcoins, potential altcoins bottoming, patterns to look for, how you can use this in your own trading and investing. And essentially, some people don't like that. They just want to be told what to buy. The point why I don't do that is because things change. And if you're not told up to date every single second of the day, then things can go wrong. And I don't want things to go wrong for you. I want you to learn how to do it and hopefully be able to make even more cash. So if you've got something tangible that you can use for your trading, then I think you're going to be much better off. If that's not for you, there's plenty of people out there telling you what you have to buy now, and they essentially won't tell you when to sell, because at the peaks, everyone just wants to know, keep holding, and you basically watch it go all the way down. Anyway, what to do next? My personal opinion, my strategies here, some physical stuff, patience, and look for reversal signals. Now, there's 2 different ways that I can look at it. I prefer for the market to prove the move to the upside. So basically give me that trend confirmation. Others, they like to keep buying on the way down, hoping that the altcoin is going to bottom at some point and that they are buying the low so they can ride it all the way up to new highs. I haven't seen that happen so much for many people, because essentially most of the stuff people pick just keep going down. And then when eventually they do turn, they don't necessarily go up all that hard or all that fast. So that's something to keep in mind. Enter positions while fear is dominant, but not too early. So I think that just comes back to point 1. Be patient and look for those reversal signals. Now, do not get bored or scared and leave the market. That doesn't mean sell. It just means don't change your strategies that you're doing every single day. Don't change your daily analysis. If you're watching and listening to stuff every day or reading things, keep doing that daily. Keep looking at your charts. Just don't get bored and leave and then come back when everyone's hyped up and you're hearing about it at work again, or I don't know, your mum calling you or some other crap like that, right? That's just what it means by don't get bored and leave. Leave does not mean sell. It just means you just get sick of looking at stuff. Now, if you're sick of looking at things, you're probably not meant to be putting your money into the market anyway. If you get bored of something, it probably means that you didn't like it in the first place. So what I look out for, my 50%, my support and resistance in those accumulation zones, and then first higher swing lows as support. So ETH, it's meeting those criteria. That was the accumulation prior to the breakout. Take this off log. So that's the accumulation zone. first higher swing lows, you could class as this or this. That's your technical first higher swing low. Market up, market comes back down, price is higher. Therefore, it's a first higher swing low. This is the highest swing low above the previous one, but the other one I like to look for is the first higher swing low above the accumulation area, because essentially that's telling me the market has broken out. You know, the asset, the altcoin broke out, it's come back and tested that zone, and now it's taken off again. So the weakness would be breaking underneath those levels. If it comes back into that accumulation range, breaking underneath that first higher swing low, very, very weak. And many altcoins have done this. Your XRPs, your ATHs, your Stellars, whatever else, garbage that came from 2017, 2021, that sort of stuff has broken back under it. Does that mean it's going to fail in the future? No. But is it a strong altcoin? Is it a leader in this market? No, it's not a leader. The leaders remain above those prices. Now, if Ethereum was to do that, break under here, well, then it's definitely not a leader. You can see from Solana, it hasn't done that. Here it is, Sol USD. It's up and it's down here. So it can fall all the way back to somewhere around that accumulation zone, 40 bucks. I'm not saying it will, and I don't think it will. But if it did, it would still be above those levels. It would just be a lot weaker than obviously where it currently sits. And ideally, you probably wouldn't want to see Solana go anywhere under roughly 80 to 100 bucks to remain in a strong position. Under $80 would technically put it into a pretty weak position. It's back under previous higher swing bottoms, significant higher swing bottoms. So that's what you'd want to be looking out for your altcoins. If you were getting in now and they broke down from that, that is, at least in my rule books, a sell signal. That's like, I tried to get in, it didn't work out. It now has pivoted and confirmed the weakness. That's when I look to get out. So that's the strategy I would use there for any altcoin. Keep a lookout on your altcoins. At the moment, many of these are still looking like they're in strong positions and continuing to try and hold those levels. That's a good sign for your alts. Now I want to get across into the total cryptocurrency market cap. This thing is still holding out. Just looking at some time frames here for this accumulation zone. We looked at rules, looked at strengths, weaknesses we've covered multiple times. And in terms of the total cryptocurrency market cap, in the accumulation, you can see from the peak to the higher lows, it did about a 6-month period here. You see 25 weeks. And then it had this low, the higher low, to the top was also about 6 months. If we just move this 6-month bar around, you can see that it does tend to work around this sort of 20 to 25 week moves, lows to highs, highs to lows. And so it has this sort of rhyming pattern within the cycles of the total cryptocurrency market cap. So what we look out for is 6 monthly moves, sort of that 5 to 6 month periods, as I said, 20 to 25 weeks. Obviously 26 weeks is your 6 months, and also 50% of that, as we do with price. You can see that even here, it fell, came back up, tested 50%, has now fallen away from that 50%, which was 527 billion. So if we look at half of that in time, so there's 13 weeks, there you go, half of that from the top, that takes us out to 10th of June, so the week beginning 10th of June. Call it the first half of June. If we're looking out for any sort of higher low or lower low, maybe that starts to head down into that June period and then bounce out of that level. So to me, somewhere around that sort of June period for altcoins might be a good area to look at for a turn or a change in trend here. At the moment, this is the low and it's sat on 50%. So it doesn't necessarily mean that the strong alts or the altcoin market cap is going to break that low. It might just mean that we put in a higher low like it's done in the past. You can see here, the market put in a low, ran up, put in a higher low, and then took off from there. And so we're just looking at those turning points to see how long these periods of the death of crypto, the dying out effect, that whole grind, the boredom period that happens in the markets, essentially the times that you want to be accumulating, how much longer might they last? So that then you can position yourself with your finances, your portfolios. How much money do you have to chip in over the coming weeks or months? Do you actually have 6 months left to accumulate? Or do you have 2 months left to accumulate? I think that is going to help out far more than almost any other thing in trading, especially if you're trying to look to get in. Obviously, getting out is a different story, and the main thing is you want to manage your risk. If you have a bit of an idea of how long the accumulation might last, this is not guaranteed, of course, then at least you can start to position yourself. Maybe you might go in a little heavier over the coming 1 or 2 months as opposed to the next 4 or 6 months. I don't know for sure, but that's the way I would look at things, and then I would layer that on top of the market structure. If it starts to break down, I'm wrong. I've got to get out and get into something else that is stronger. But if it does put in those higher lows and then hold out here, well then probably not a bad time within that zone. And that leads me to the final point, and that is, what are we trying to do here in the markets? We look to accumulate around the lows. We look to sell out somewhere near the tops or the other tops, wherever that top might be. And we're not trying to pick the exact low. We're just trying to roughly gauge the sentiment of the market, looking at the facts, the data from the charts, essentially combining those so that we can marry it with our trading plan and have a bit of an idea of when we could start to go a little heavier as opposed to lighter. And that comes back to this here, the defense and the offense. Defense is protecting the capital and offense is deploying the capital. So I'd say we're somewhere in that offensive period now, knowing that it could come a little lower and that the defensive periods will come later. The defensive periods come when everyone else is super excited about the markets and how they're just going to go up forever and, you know, we're going to 500,000, all that sort of nonsense, right? So offensive is the boring times, defensive is the exciting times. Keep it that simple. I'm pretty sure you'll do damn well. And also in these times, quick shout out to channel sponsors, SwiftX, Bybit. Check out the links in the video description. This is a time where the exchanges are quieter and they can help you get signed up. They can help you if you've got issues trying to transfer money and do you sort of thing. Everyone needs an exchange at the end of the day. You choose this, choose whatever you want. At the end of the day, it's up to you. You get sign up bonuses here. The major ones would be these ones at this end. Deposit this and get that sort of details. Almost no one gets these ones at the top. So it's there obviously for sales and marketing. Anyone offering any more than this, no chance. Anyone offering $50,000, $60,000, no one's getting those sign-up bonuses. They're just there to try and hook you in. The major ones people get would be at this end of the scale. And if you're lucky enough, maybe you're getting the 800s or the 8,000s. Or if you're a little bit more humble there, SwiftX for the Aussies, $20 free BTC. Thanks again, guys. Appreciate your support. Smash it up. 4,000 likes today's video, and I'll see you probably outside tomorrow on location for a nice beach day. Take care and peace out.